Okay, folks, welcome to Coffee with Bob. This is going to be a quick update on the jobs report that was released this morning. And what we're going to talk about is the reaction by the market, and not just the stock market. We're going to talk about the bond market as well, because the bond market is what's going to matter. We're also going to talk about the expectations post announcement of the jobs report of Fed rate hikes going out to November. And let's begin. So up top here, Microsoft. Microsoft spiked up higher. We got an overbought alert on a 15-minute time frame, and it's pulled off those highs. But we closed out a strangle on Microsoft, anticipating a breakout. And it looks like we're getting that breakout, so that was a wise bet on our part. We're going to look to reestablish that position today, but going out further out in strikes and further out in time. That helps to increase our probability of profit. So that's one trade we have on the table for this morning. Now, in looking at bond yields, this is what's a little bit strange, and this is why you're seeing the NASDAQ, which is center middle box here, the NASDAQ futures, beginning to peter out, actually, because we are now higher on the 10-year than where we were prior to the reading of the jobs report. Now, the Mockingbird Media on CNBC, they had a guest on, I forget what her name is because it really doesn't matter, they're all the same, betting that this would be a report that causes the Federal Reserve to pause, and we should expect a rally in the markets because traditionally the markets rally on a pause. That may be the knee-jerk reaction, but if you have been a member or a viewer of mine for any length of time, the first place you would go to look is the inversion of the bond market or the bond yields, the yield curve. And the yield curve on this news, you can see the 10-year is now gaining. The yield curve, as I looked earlier, let me refresh this. The yield curve, 2s versus 10s, 2-year is down 0.62 on the 2-year, but the 10-year is actually up. This is a steepening of the yield curve, and we have been up this week. Not dramatically, but this is going to magnify the move up higher on the yield curve if, in fact, we close out the day the way we are right now. That may not happen. But this is technically bearish for equities. Now, what are we going to do here? We're not going to do much. We're going to let the market play out. We're not day traders here. We're going to watch and see what the market does. And there's a good argument for a continuation move up higher today. And the reason is this. Let's go to the CME Fed Watch tool. You can see that we've only solidified the expectations for a September meeting. There will be no rate hike. And November, that was a 50-50 bet at best yesterday. Now, we're looking at 65% probability no rate hike in November. It's too early to go out to December. So that would be a cause for the markets to rally this morning. Do they close that way? We're not sure. The markets have had, particularly the triple Qs, have had a very strong rally, and they are up and into, weekly chart, up and into some real serious resistance here on a weekly time frame. Now, if we close above this resistance level, that will be very, very bullish for the Qs. If we close down below 374, it's much less bullish. Now, next week, if we do close above resistance in red, I suspect that we are going to get a pullback on the Qs to do a retest of support. It'll probably hold, and we probably move up higher with a multiple on the S&P 500 of 31.09. Very, very expensive. But that doesn't matter, right? We're in a market right now where all that matters is what the Federal Reserve may or may not do. Simple as that. So members will be watching the price action on the day, and by the end of business today, we'll have a strategy formulated for how we're going to set up for the new trading week. What all that matters to me right now is How do we close on a weekly time frame? One trading day left to go. We know a lot can happen here. So with that, everybody have a profitable trading day, an awesome weekend. I'll talk to you soon. And don't forget, Monday Night Futures Live, not Sunday Night Futures Live, but Monday Night Futures Live. Everybody have an awesome Labor Day weekend. I'll talk to you soon. Be well.